JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 15th of December 2022. So yeah, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, the usual quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. So yeah, so that's jfdbrokers.com. Now then, guys, jumping into the chart. So the first one, as always, I want to pick up here is Nikkei 225. Overall, you can see that this is what I've mentioned before. We're kind of still trading within this potential kind of veg or maybe even just a triangle pattern. As from the shorter term perspective, we're still holding above this 21-day EMA and in general above all of the EMAs. So in a way, there is still hope that we could see this one, traveling a little bit more to the upside towards maybe the upper side of this potential triangle pattern. Now, it's not really as exciting as it could be, I think, but hey, that's the market. So we kind of have to deal with what we have. So look, as long as we stay above this 21-day EMA, yeah, I'm gonna go aim higher. I'm not gonna really, let's say, talk about this too much. But if we start falling below all of the EMAs here and maybe even this 27,415, then yep, this is where I'll get a little bit more excited with the downside. Now, Shanghai Composite, yeah, drifted a little bit to the downside. I mean, it's not significant drift, but look, it fell below that 3,171 territory. I spoke about that level. So yeah, what I said previously, that if we fall below this hurdle, I'll aim a little bit more to the downside towards these EMAs, the other EMAs, the 21-day and the 100-day, or maybe this upside line together with this 3,145 level. So far, I think that we might be on the right track, but look, I'm not going to say anything here. It's a tricky one, so that's why my downside scenario is actually on a break of this upside line, and then yeah, I'll get comfortable with lower levels. At the moment, there is still possibility that we could drift lower, find support near this upside line, and then rebound back up. However, the more cautious approach for me here would be to wait for a move above this 200-day EMA. ASX 200 drifted lower. Again, I'll repeat myself. I think that yeah, these the Nikkei, the Australian index here, are kind of following what's happening in the US. So yeah, at the moment seems to be the case. So look, yesterday the US declined a little, but yeah, and then we had kind of little decline here as well. So anyway, long story short, what's going to happen here further? Well, at the moment, the fact that we're back to this 21-day EMA, yes, it kind of gives an opportunity maybe for the bears to step in potentially, because look, I mean, we're kind of very close to this up 21-day EMA. However, I would prefer to wait for a drop somewhere below this 7,147 territory in order to go lower towards that 200-day EMA. Now, Nasdaq 100. Okay, so there we go. This is, of course, the main action happened yesterday after the Fed decision, and well, looking at this picture, you can see what's happening here. So basically, what I talked about yesterday, I said that, hey, look, if we pop through this upper side of this upper side of the kind of rising wedge pattern, because look, I mean, please excuse my lines here, but I think that for now all of them are valid and all of them are really needed. So yeah, and I think that all of them are so far working out, so that's quite interesting. Look, what I said to you yesterday, that if we pop above this upper side of this kind of this rising, or I wouldn't say maybe actually a rising wedge, it's not really an ideal rising wedge, it's like more of an upside line here, which is connecting the upper, the tops. So if either way, if we would pop above this 12,166 territory, then I would go higher towards that 200-day EMA, but we didn't get that. Instead, we got a decline and we drifted lower. We fell back below the 100-day EMA. But look at this. Yesterday, I've drawn this upside line taken from the low of the 4th of November, and look how well it played out. Look how well it carried its role of support, and yeah, so far it's doing the trick. And yesterday we closed around 11,740 territory. Currently, the cash index showing that we are just slightly below this area, but near this hurdle, the one that I talked about yesterday, the 11,707. Now, look, I'll still stick to the same game plan. I would prefer to wait for a break below the upside line here in order to go a little bit lower. And by lower, I mean not this level specifically, the 11,500, but actually this downside line connecting the lows of this kind of little area, this little period, or in other words, look, I mean, the broadening triangle, the one that I talked about. So here we saw the hold up near the upper side of the broadening triangle. Now it seems that we could go back down towards the lower side of the broadening triangle. Well, will that be the case? Again, we need to see a break of this upside line. Yesterday, the Fed increased rates by 50 basis points. I mean, that was expected. Kind of came in line with the expectation. However, certainly the market should have sold off maybe a little bit stronger, but I think that they have seen, the market interpreted that increase, although it was an increase, which is kind of a negative thing here for the stock market. Why the stock market didn't really collapse that much? Maybe it's because the market participants kind of saw this as a more of a positive, because it kind of signaled some sort of a slowdown in the rate hike. So it was 75 basis points before that, so now it's like 50. I get it. It was like already kind of known that it will be the 50 basis points, but still the element of the doubt still remains up until the end. So and the market participants, hey, thought, hey, maybe this is gonna end up being a slowdown here. However, this is not really clear yet, because, well, I think that the Fed will continue monitoring the situation, especially the wage inflation. So look, at this point in time, I think that if we just go purely from the technical perspective, if we continue to trade above this upside support line, this one right here, taken from the low of the 4th of November, then there is potential for this one to reverse back to the upside and go higher. So basically something like this, which could be still a possibility. Now, certainly if we clear the upper side of the broadening triangle here, then yes, we'll go further north towards that 200-day EMA. But if we start breaking this upside line right here, then yes, this is where I'll start aiming for the lower side of the broadening triangle, and then we will take it from there. So long story short, we have to wait. If you do like to trade something like that, great, guys. I mean, you can take advantage maybe, but don't forget to have your stop loss in place, because again, it could change very, very quickly. And don't forget about the false breakout. So maybe you're going to be right, but there will be a false breakout which will take you out, and then you will be disappointed. And then actually, after some time, it will go back to your direction. I mean, we have been in these situations before, so it's not something new. But just I'm saying that, you know, like you have to consider that, like that maybe you're going to be right here. Let's assume if this is going to drift lower right now, test the upside line. We're thinking, you know, it's going to start holding around here. Then we're going to be we'll start thinking that, hey, maybe this is going to be like a good hold up here. We'll go long. It drifts lower, it gives like a final move to the downside, takes out a lot of traders here, the stop losses and everything, and then by the end of the day it kind of still travels back up and remains above this upside line and then goes higher. So, you know, this is something that could happen, but look, you have to accept the fact that, you know, this is a valid point here, so just try to hold your emotions, and I think everything will be fine. If you don't like this scenario here, for example, you know, I don't blame you. Just kind of wait. For example, for me personally, in terms of with the upside, maybe I would look at this 100-day EMA instead. So if we would push above this 11,850 territory, somewhere around here, then I'll go a little bit more to the upside. So, you know, just for that extra confirmation, because we're very close to this upside line. If it breaks, I mean, this could open the door towards lower levels easily. And by lower levels, I'll repeat myself, I'm aiming for the lower side of the broadening triangle. S&P 500 very quickly on that one. Look, this is still a range, beautiful range, so I'm not going to spend too much time on this one, and I'm just going to say the same thing as I said before. I am waiting. I'm waiting for this one to make a move out of this range, and then I will take the next, you know, short-term directional move. We do have some obstacles here. For example, good potential targets, 4,200-ish area, 4,203, something like that. So if we do break the upper side of it, this range, then I'll go towards that level. If we fall below the 3,911, 12, something like that, then I'll go a little bit lower. German index, DAX. This one remained actually flat, but yeah, because of course during the European session there was no huge activity. The main activity came in like late in the evening during the U.S. session, yeah, with the Fed. So look, we're still kind of stuck. I would like to say a range, but we did get a violation here. So look, I mean, maybe I'll actually stick to this terminology of range here, because at the moment, I'm going to keep an eye on this. This range is roughly between the 14,585, let's say, and the 14,200, let's say, roughly around those levels. Not exactly, not specifically, but, you know. And then we have the midpoint, which actually yesterday, for example, acted as a very nice area of support around the 14,385. And if we continue to trade above it, and just bear with me one moment, the cash index, the cash index is currently sitting just slightly below this hurdle. So, which means that there is potential for some downside here towards maybe the first of course, the 21-day EMA, and then maybe this 14,200 territory. However, I will stick to that idea maybe if we remain below this 14,385 territory, this midpoint of this potential range. I mean, let me just probably mark this for our future reference. I think this would be useful. So it's like, again, I will repeat myself. It's not ideal. It's somewhere like here. I mean, let me just probably push this one as well here. There we go. So look, this is it could be interesting. Again, we're currently in this little range here, so if we break through one of those sides, then yes, this is where I'm gonna do something about it. At this point, I don't like it, but I mean, I like it and I don't. But let's say I don't like to do anything right now with it, but I don't want to do anything right now with it. But at the same time, it's quite exciting, because once it starts breaking one of these sides, this is where, you know, it could become a little bit more interesting. DXY dollar index, very quickly. I need to speed up a little bit because I think I've held a little bit too much on the indices. I mean, I do have some other interesting instruments to go through. So look, DXY, beautiful drop yesterday. We remained below this 104.11. I said that if we stay below it, I'll go lower. Today we're seeing a bit of a retracement. Look, this is going to be an interesting one here right now. As long as it stays below this, I'm going to lean towards the downside. However, if it starts pushing back up above this hurdle, I'll aim for the 200-day EMA. pretty straightforward, pretty simple. This is going to be my kind of gauge here. This is going to be my barrier. If we're above it, I'll aim higher. If we're below it, I'll aim lower. I'll try to simplify this, like I said, because again, it's very difficult. I mean, we can try to start drawing some channels here, maybe, you know, some wedges or something like that. But look, I think that at this point, I think just kind of let's make it more simple and just have our stop loss in place. And I think that if you do really want to trade this one, then you have to accept the fact that there might be some losses. But again, you know, just manage it carefully, and there will be some positive trades and negative trades. So as long as you come out like at least with some sort of a gain, that would, of course, that would, like I said, that would be swell. Gold is drifting back down after, you know, this fantastic move here to the upside on Monday. We tested, sorry, not Monday, Tuesday, CPI number here, and yeah, we hit the upper side of the rising channel. Okay, look, what's next? I think that a good idea here is to yeah, let me just see what can happen here. I think maybe something like this. Yeah, there we go. Let's see if that's going to be the case here. Okay, this is one of those moments where I hate this because I need to redraw the channel again. Just bear with me one moment. Where's that channel? There we go. So, something, I think, yeah, I think it's trying to see something here. Look, maybe it's this way. Could be the case. Yep. I think, yeah, we need, yeah, this is, I think, looks a little bit better. Look, again, it's really, I wouldn't say objective, it's very subjective, this rising channel. So, I mean, if you want to draw this a little bit different on your chart, feel free. Honestly, it's like, because it just, we kind of try to see roughly the areas, like the boundaries of this one. I mean, it's not never a specific level or something like that. No, it's just kind of the area. So, you know, please excuse my channel if it doesn't look like your channel there. So, yeah. So anyway, long story short, what's next? Look, we fell back below the 1797 territory. I talked about this level yesterday, and I said that if we fall back below it, I'll aim a little bit lower. Now, I need to reiterate that a little bit, because yes, partially, I'm kind of sticking to that. However, I've just noticed that I have a little problem here, which is, just bear with me, on the shorter term time frame, we have this thing. Okay, look, maybe this is going to end up being like a rising wedge or something like that. However, until we get that break through the lower side of it, it's really wrong to say that this is like, you know, this is going to go lower or something. No, as long as it stays in this pattern, it could still go back up here. You know, it could go higher, test the upper side as well. So, you know, and then maybe do the breakout later on. So, and maybe actually it won't even do the breakout later on. Maybe actually it is, you know, it's just going to go higher again, and that's it. So that's why we're just kind of trying to position ourselves accordingly, correctly. And at this point, I would say I'm leaning a little bit more towards the downside on this one, as long as it stays below the 1797 territory. But more selling could come in on a break of this little short-term upside line, taken from the low of the 7th of December. WTI oil very quickly. So we've pushed closer to this downside line. Okay, that's fine, but I need a break of this downside line in order to go higher. At the same time, a push above the 21-day EMA might attract a few more buyers into the game here, and we could go, you know, north towards the my initial target, the 82.10, because this was the barrier that I looked at for the upside. So if we would break that barrier, I would go higher. But at this point, look, I mean, this could become just the target itself. So let's you know, consider that one. But again, in order to go higher for me, I need to see a break of this downside line and a push above the 21-day EMA, which so far is acting as a very nice area of resistance, as it did here in the beginning of December. Now, in terms of the downside, look, previously I talked about this 70 territory. Still, I am more comfortable with this area. However, I do understand maybe the impatience of some traders. So, you know, maybe you're thinking, hey, let's take advantage of something here. You could. The only thing is, I would say be very careful. Now, previously I talked about this little hurdle, the 73.62, but I think, okay, it can stay, but I think it's also correct to say that maybe it's something around here, this inside swing high of the 9th of December, the 72.90 level could be an interesting one, because the problem with this is that, look, when let's say we do have a scenario like this where it previously acted as a good area of support, then we broke it, we climbed higher, then we, let's say, violated just purely and just it just totally ignored that level. But sometimes, for example, we get this a move back down where it actually ends up testing, so it acts basically as a good area of support but not resistance. So we do have these scenarios sometimes. You need to kind of accept those. So sometimes the level acts as a good area of support but not resistance, and vice versa. That's why, for example, I have this level as well, like the 72.90. So let's say if it drifts lower and let's say we totally ignore the 73.62, then maybe there's a good chance we could respect the 72.90, maybe get a hold up somewhere around here, and then we could drop lower. So that's why my downside scenario within this area would be from around 72.90. Like I said, just to be a little bit more on the safe side. Ethereum very quickly. Look, after we broke the downside line, we traveled higher, we then retraced back down, came closer to this downside line again. We didn't really test it from above. We came very close to it. However, personally, I would say I will take that because I talked about these scenarios before. Now, what's next? Well, first of all, they do have a bunch of interesting levels. So, for example, this one, the 1350, 1350 level. Look at how well it's acting as a resistance. We have the 100-day EMA here as well, which could be an interesting one to watch. We're now above the 21-day EMA, the yellow line here, so that kind of could be seen as a little positive. But again, don't focus on it too much, because maybe we're just oscillating around that 21-day EMA, like here, for example. So just kind of probably the safer option is to keep your eyes on the 1,350 level. If we pop above it, my next target, it will be this 1,500 or actually this downside line. It's a tentative one taken from the high of the 14th of August, but a good potential target. If we clear that, then of course is the 200-day EMA. But I think that judging from the previous trading here, we can see that whenever we kind of moved higher, it seemed like we will go towards that 200-day EMA, but we failed here. For example, in the mid-August, we traveled higher. Everybody was kind of, me personally as well, I was kind of aiming for this 200-day EMA, and then it kind of stopped here and drifted back down. Then again, back in the beginning of November, we traveled higher, almost kind of came close to this 200-day EMA, and then drifted back down. So similar story could happen again. So where we, for example, we could pop above the 100-day EMA, we could go higher here, and again, I will be, honestly, I'm telling you, I will be also aiming for this 200-day EMA. However, I'm not excluding that it could just end up testing this downside line and then drifting back down. So, we have these scenarios, so it's quite logical. It's quite justified, but let's see if that's going to happen, of course. For the downside, pretty straightforward. I will stick to a very, very conservative approach here. Wait for a drop below the 1,070 territory in order to go lower. AUD/USD, guys, so there we go. Beautiful move here to the upside. We climbed above the 200-day EMA. We traded yesterday above that area, and we drifted now back to the downside, back below this 200-day EMA. Now, the positive thing here is that we're still above this upside line, taken from the low of the 21st of November. Now, if you're looking at some higher levels, I would say, look, it's better to maybe stick to something like this. Again, I probably are tired of my veggies here, but I'm lately I'm just seeing those so far. Again, maybe I'm being very biased, so maybe I'm trying to see what I want to see, but hey, I'm kind of seeing this, and then it seems to be working. Now, we're drifting back down right now. And of course, if it is a rising veg, then it would be a beautiful breakout here to the downside, which could open the door towards this upside support line taken from the low of the 13th of October. Now, it's a tentative one, but hey, nevertheless, could be an interesting one to watch. But again, if we do consider this, then we need to see a break of this a break of the lower side of the rising wedge pattern. Now, for the upside, I will kind of stick to this upper side of the rising wedge. If we break it, I'll go higher, and then yeah, I'll enjoy my life then. So in terms of the going higher here, this level here could be an interesting one, the 0.6893. We clear that one. This will confirm a forthcoming higher high, and we could then start aiming for these levels, and so on and so on. But let's get to that point first. At the moment, we're just kind of trading in here. I'm not touching this one. I'm just observing the price action. AUD/JPY. Look at this. How well this downside line is providing resistance. So in a way, still the same game plan remains valid. I need to see a push above the 93.16 territory, somewhere around here, in order to go higher. But I think that for extra confirmation, 93.35 level could be a good watch, because look, it's the current highest point of December. Is that correct? No, sorry, that's the current highest point of this week. There we go. Not the December, but this week. If we pop above this barrier, the 93.35, at the same time, we could pop above the 100-day EMA. This would confirm a forthcoming higher high, and yeah, yep, so on and so on. For the downside, look, I have talked about this previously, and I think that from the shorter term perspective, while we are in this pattern, the descending triangle pattern, which according to all the TA rules tends to break to the downside. However, the downside break is still required in order to confirm that pattern. But inside, if you're looking for some trade inside here, I mean, maybe a good option here could be to watch this 200-day EMA. A fall below it may lead to a move towards the lower side of this triangle pattern. AUD/CHF, still a range. I'm not gonna expand on this anymore, guys. I mean, I have been talking about this for a while, waiting for that clear breakout. We're closer to the lower side of this range. Let's see if we can break the lower side of it. However, if you are looking for some higher levels in this one, then I would say start off with this, the current highest point of this week, near the 0.6390. We clear that, we go to the upper side. We could go to the upper side of this range. Here we have the 100-day EMA. If clear that one, guess what? The 200-day EMA opens up, and we could target that one. NZD/CHF, just a quick one. Look, I keep on talking about this one. I think this is quite interesting, but if you don't like this one, that's fine. Okay, I mean, you know, you stick to what you like, guys. But overall here, we're, you know, after reversing higher at the beginning of October, we continue to form higher highs and higher lows. We're currently stuck in the range here for the past 2 weeks. And yeah, we need to see a clear breakout here through one of the levels in order to go, you know, in order to consider the next short-term directional move. So in order for me to go higher, I will stick to this 0.6020. For the downside, I'll stick to the 0.5934, but we do have this upside line which could provide support. However, if this gets broken, we would be below all of the EMAs here on our daily chart, and that would open up, you know, lower levels here. USD CAD, very quickly on that one, we drifted lower, but we remained, well, actually, sorry, we didn't drift lower. Yesterday, we kind of remained at the same point. We tried to push higher, and then we, you know, drifted back down. We remained above the 21-day EMA. So in a way, this is kind of could be seen as a positive. However, we're still very close to this upside line right now, and of course it still increases the chances for a possible breakout here, but again, a breakout is still needed in order to go lower. Simple as that. For the upside, 1.3685, that's what I need. I already mentioned this in my previous videos. This is what I need in order to go higher, because again, a break here, because as you can see, it acted as a fantastic area of resistance, support, then resistance again. So if we clear this barrier, great. I think that more buyers could join in around here. If you're looking for some areas in this territory, personally, me, I would leave it. Like I said, I don't think it's worth it. But once we get a clear, you know, a more clear breakout here, then yeah, it could become a little bit more interesting. USD/CHF, there we go. Look at this, guys. I talked about this recently, and I said, well, last week, this week, you know, and I was talking about this potential idea of a wedge here. But I said at the same time that, hey, maybe it's not a wedge, maybe it's just a pennant, because we have a pole here and this bearish pennant. And yeah, that kind of ended up being a bearish pennant. So you have to consider all the scenarios, all the situations, and this is the point where, like I said, if we do break the lower side here of the bearish pennant, then yep, this is where we'll go lower, and we did go lower. Great, wonderful. However, I have to admit that my target was around 0.91. 95 level right here, marked by the lowest point of March of 2022. Sorry, not the lowest point, that's the low of the 31st of March. There we go. Not the lowest point. Look, and we came very close to it. I will say I'll take that. This was a good result. So now what's next? I think that it's time to get rid of this idea of a bearish pennant. I think we can remove it. And now we can just stick to this steep downside line. So if you're looking for some higher levels, guys, well, I would say wait for a break of this downside line, and also maybe a push above this 0.9326, 27 territory, somewhere around here, could do the trick for a few more buyers. But I think that maybe actually we can even start looking at from here, from around here, from the 0.93. 12, something like that, and then yeah, we could aim for the other tentative downside line here, taken from the high of the 21st of November. So yeah, pretty straightforward. But as long as we stay below the steep downside line, I'm aiming lower. GBP USD, so there we go, my beautiful veg. Honestly, this is just amazing. I really want this to work out. However, I get it. I'm becoming very biased on this because look, I mean, it still could pop higher, for sure. If the dollar is on the weaker side, then this could still push, north, and we could then ignore the whole rising veg pattern. But the thing, I cannot really, let's say, get rid of this idea that it could be quite a beautiful one here. Look, we have this 1.2444 level, which is acting as a fantastic area of resistance. If we do pop above it, I will go higher, but again, we do have the upper side of this veg, and maybe it could provide that last resistance. However, if it fails then and starts breaking this this upper side of the veg, then yes, ignore the whole veg idea, and we could start aiming higher for that 1.2667 level right here. I think my arrow is a little bit too big here, so basically I'll do this instead. And in terms of the downside, guys, well, we have a kind of a veg within the veg. I do like these situations, but again, I do accept the fact that I need to wait, I need to be patient, and if we do get this breakout here, wonderful, we could go lower. And if you're looking for a level, and this is one of those moments where these patterns tend to happen sometimes. They're very like I would say, maybe, I don't know, from my personal experience, like when you have a big candle like this to the upside, then a smaller one which is kind of remains within the tail, the body of the second candle remains within the tail of the first one, then there's hope that we could see a reversal here. However, probably the 1.2342 level could be a good indication here for the downside. If we break it, yes, I will get a little bit more excited with the downside here, and I'll aim for the initially for the 200 and the 21-day EMAs, and then this lower side of the bigger rising veg pattern. GBP NZD, quick update again. The only thing is I just wanted to mention that, look, this is one of those moments where it was kind of forming, it was showing that the downside line is the one to watch. It's like, it's one of those, important lines here, and it was respecting it initially, and it looked like more of a descending triangle. But then again, look, we had a break through this downside line. We stayed above it, and now we're flirting with that 21-day EMA. So if you're looking for some higher levels, I would say wait for a push above that 21-day EMA, and we could go then more to the upside towards the 100 and 200-day EMAs, or maybe this level right here for the downside. Now, in case, let's assume the fact that this downside line actually does not carry any significance, and maybe just the EMAs are carrying the most significance. If you look at it from that perspective, then you will see that you'll see that basically we are below all of the EMAs, and that is kind of a negative signal here. So, however, However, a breakout is still needed, so a drop below the 1.91 territory is required. So if we gonna go, below this hurdle, then yes, I'll get a little bit more excited with the downside. GBP CAD very quickly, guys. Also, something that I was watching previously, if you remember, I've drawn a rising wedge here. This is one of those moments where the rising wedge did not work out because it was something like this, basically in these lines, but you can see it kind of broke the upper side, so we have to adjust and we have to remove that, and now we just kind of stick to some of the levels, or should I say I'm sticking to some of the levels here. Now, we're currently trading near, let me just grab a line here. We're trading near this area, quite an interesting one. This is where it's currently finding some refuge. 1.6796, I think is that roughly 1.6796. Yep, that's what we're currently sitting at. In a way, I would say if we stay above it, then yes, I'll continue aiming to the upside. But if we start falling below this and we fall below the 1.6717, something like that around here, then I'll consider maybe a bit of a retracement here towards this upside line. And don't get me wrong, some of you are probably already waiting for that retracement. But as I said to you previously, look, as long as we get our confirmation, I was warning you about this, guys, in my previous videos. I said we need some confirmation. At the moment, we're not getting that for the downside, and that's why it could continue still drifting higher. And you can see exactly that's what's happening. This is how the traders get taken out. So look, wait for it. It might not be the perfect entry or something like that, but hey, wait for that confirmation. For me, I would say I'll start looking at some lower levels from around here, from around this 1.6717. If we start falling below it, I'll consider a retracement to the downside. EURUSD, very quickly on that one. Similar story, to be honest, but look, I mean, this is quite interesting. I talked about this 4462 territory yesterday. We violated it, we stayed above it, and today we're drifting actually back below it. Now, not ideal for me, to be honest, but hey, I have to take it as it is. But I would say at this point, I'm just going to leave this one. Although I really am craving for a move here to the downside, but I'm going to leave it for now. And I need that confirmation of some sort. At the moment, I'm not seeing that, so I'm just going to, watch it and assume that it's going to continue traveling higher. EURUSD, similar story, but this one is a little bit more interesting. Look at this. We're testing the upper side of the falling channel here, which means maybe, just maybe, we can get our breakout here again. Look, we had that little breakout yesterday here. Again, this downside line is very subjective. It's not really an objective line, but the fact that we are currently just flirting with that upper side of the falling channel, that gives us a bit of hope that more upside here could be possible. And at this point, I would say as long as we break and stay above this upper side of the falling channel, I'll aim for the 200-day EMA, which is roughly around that 1.6655 level. Then if we clear that one, I'll go higher, slowly, step by step. So at this point, that's the game plan. For the downside, pretty straightforward. I'm going to take a very conservative approach here. 1.6415 is the one to watch for me. EURUSD, look at this. We tested the upper side of the rising channel, and what we're doing right now, we're drifting back to the downside. The question, can this be maintained for the rest of the day today? Well, I would say similar story as with the GBP USD, actually. Where is that? There we go. Where I've marked I've explained this little pattern idea. Similar story could happen here. I mean, not an ideal one, this is what I would say, because the body of the second candle remained kind of slightly above the tail of this first one. So, it could be the case, could not, depends. But look, what you can at least look at here is the low of yesterday, near the 1.0619. If we fall below it, then I'll consider a move lower. I'll aim for this 1.06 territory, or 1.0595, and if we clear that one, then so on and so on. So you can start looking at the downside from around the low of yesterday, but again, don't forget about false breakouts. And if you're looking for some higher levels on this one instead, then well, I would say yesterday's high is a good indication. 1.0695, a nice good push above it would also put the pair above the upper side of this rising channel, and we could then ignore the whole rising channel idea. So That's it, guys. I mean, I think that this is quite clear. We've hit the upper side of the rising channel, so maybe it's time to see a bit of retracement. However, don't rush into this conclusion yet because a confirmation is still required. And I've just mentioned about my confirmation levels. So, guys, that's it for this session. I'll have to wrap it up here. I think I went a little bit over my time here, so apologies for, dragging this a little bit too long. But yeah, thank you very much for joining in, watching till the end. I really appreciate your time, guys, your views, your likes, your comments, everything. I really appreciate that. So thank you very much. If you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, have a beautiful trading day. Stay safe. Have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.